The crypto economy has exploded in recent years, creating significant passive opportunities to generate wealth. Among these opportunities is a new and exciting network called the Anchor Protocol that allows instant withdrawals and pays depositors a low volatility interest rate. So, let's find out more about how to earn passive income by using Anchor Protocol. Number 8. What is Anchor Protocol? The Anchor Protocol is a savings protocol launched by Seoul-based company Terra Labs in March 2021. The Anchor rate is powered by a diversified stream of staking rewards from major proof-of-stake blockchains, and therefore can be expected to be much more stable than money market interest rates. The Anchor community believes that a stable, reliable source of yield in Anchor has the opportunity to become the reference interest rate in crypto. The Anchor protocol defines a money market between a lender looking to earn stable yields on their stablecoins and a borrower looking to borrow stablecoins on stakeable assets. It creates stable, high-earning savings by accepting deposits of Terra USD or UST from investors and rewarding them with high yield and low volatility interest rates. Through this, it expects to increase demand for UST, which aims to surpass DAI in circulation. By offering high interest rates and minimizing exposure to crypto volatility through its use of stablecoins, Anchor attracts investors who are looking for a passive income with low exposure. In doing so, Anchor Protocol is growing the DeFi network and putting it in direct competition with traditional financial institutions. This decentralized money market offers depositors a stable 20% annual percentage yield. Borrowers can collateralize UST loans using bonded Luna or B-Luna, Terra's native token. Anchor plans to expand support to other proof-of-stake layer 1s such as Solana's native token, Sol. The protocol earns a return for the depositors by staking borrowers' Luna collateral. ANC is Anchor's inflationary protocol token, offering holders governance rights as well as a percentage of protocol earnings. Number 7. History of Anchor Protocol. Anchor's launch was the realization of Terra Labs' vision of integrating 3 primary financial primitives: payments via UST, savings via Anchor, and investing via Mirror Protocol on the Cosmos SDK-based Terra blockchain. It also allows traditional finance participants to integrate with DeFi. Anchor has an API that fintech platforms, exchanges, and B2B businesses can integrate and offer interest-bearing savings accounts. In fact, Anchor is the first interchain DeFi application that pulls the emission from proof-of-stake blockchains, stabilizes it, and passes it on as fixed high-yield interest to depositors. Anchor, with its simplicity and ease of integration, successfully bridges the gap between DeFi's composability and mainstream adoption as a savings product with mass appeal. Anchor is a principal-protected stablecoin savings product that pays depositors a stable interest rate, and it achieves this by stabilizing the deposit interest rate with block rewards accruing to assets that are used to borrow stablecoins. The Anchor protocol is redefining savings to be a decentralized process that works for the investor as opposed to major banks. Additionally, it is designed to make instant withdrawals, meaning that if an investor feels concerned about the way things are going, they can get out quickly. Number 6. Anchor Token and its economics. As we know, ANC is the native and governance token of Anchor Protocol. Users have to deposit ANC to create governance polls. Voting power is proportional to the amount of ANC staked in the vote. Voters with a higher ANC stake in the vote will have higher voting power to decide whether or not to implement the changes listed in a governance poll. ANC is designed to capture a portion of Anchor's yield, allowing its value to scale linearly with Anchor's assets under management. This means that ANC stakers receive protocol fees pro rata to their stake and benefit as adoption of Anchor increases. ANC tokens are also distributed as incentives to UST stablecoin borrowers proportionally to the amount borrowed. Anchor Protocol has a total supply of 1 billion ANC tokens, and 40% of that has been set aside as borrower incentives for the next few years. This means that users are rewarded for borrowing UST, and both lender and borrower can earn using Anchor. Anchor's total value locked, or TVL, has already crossed 5 billion USD and is only expected to go up. Besides, in case of Anchor, its smart contract automatically executes direct borrowing and lending agreements between protocol users. The smart contract allows automated and direct peer-to-peer lending and borrowing of certain cryptocurrencies. Number 5. Simple and risk-free passive income. Decentralized finance has opened up many opportunities to accumulate wealth such as yield farming, staking, and liquidity mining. However, the complexity of moving assets across various money Lego programs to make a passive income makes it a confusing and complex process for most investors. Moreover, cryptocurrency's infamous volatility means that investors investors must constantly monitor the market to make informed decisions on whether to be risk-averse or take a chance. The Anchor protocol is designed to address these issues and provide a simple and risk-free way to earn a lucrative passive income. We have seen that a lot of DeFi systems have offered high earning yields before. The 20% mark set by Anchor is by no means the highest that we've seen. Seeing interest rates in the triple digits is relatively common in DeFi. However, what is to be liked about Anchor is its commitment to making this a savings account for the masses. To do that, they know they need to provide stability. Whereas other protocols offer triple-digit yields, those returns often diminish, sometimes quickly into single-digit yields in the blink of an eye. They're not dependable, especially for passive income. Anchor's 20% annual yield on USD means that it's not an investment at all. It's more like a savings account because the value of 1 USD is as stable as a United States dollar. Number 4. Bank-crushing stablecoin. Banks aren't going to be increasing their saving rates by any meaningful amount, let alone to double digits anytime soon. At 20% or even at 15%, the Anchor savings rate crushes anything a bank can offer you in fiat. Not to mention the APY is on a stablecoin pegged to the USD. Holding USD doesn't expose you to the same price volatility of holding other crypto, which means it's a lower risk investment within the crypto ecosystem. You have less risk of your passive income being swallowed up by a drop in the USD coin price because it's pegged to the USD. Number 3. No docs required. Anchor Savings has no minimum deposits, no account freezes, and no sign-up requirements. The smart contract can be used by anyone in the world with access to the internet and some crypto. Anchor's important features include instant withdrawals through combined lending of stable currency deposits and protection through liquidation of loans at risk of under-collateralization. Also, Anchor's open-source Savings as a Service SDK can be integrated in 10 lines of code into any service application that has user balances so that it can reach any user who wants to use it without complication. Number 2. Stake the LP assets to earn passive income. Anchor protocol aims to be the gold standard for passive income by establishing a stable savings rate across the typically highly volatile crypto and DeFi universe, utilizing proof-of-stake block rewards. You may provide ANC or USD liquidity and then stake the liquidity pool or LP assets to earn ANC. This option can be found on the Govern tab in the application. Here, the investor will provide assets to the ANC USD LP. More liquidity in the pool will mean that ANC and USD transactions are delivered at better rates and their values will be more stable. The reward for providing this liquidity comes in the form of a percentage of all the transaction fees. Next, the investor should stake those liquidity provider tokens to simultaneously gain staking rewards. To provide liquidity to the ANC USD LP, an investor must provide an even amount of both assets and pay a transaction fee. Number 1. The road ahead. Anchor protocol is an exciting new way to look at savings. It offers investors the chance to put money aside and earn real yield instead of locking money in a traditional bank savings account and only earning minimal interest. To conclude, Anchor protocol actually offers users a convenient and frictionless way to get high returns on their stablecoin deposits and spend them with ease. There is no doubt that one of Anchor protocol's strongest points is the security it provides against market volatility. Starting with Terra and ending with Anchor protocol, there is no doubt that it is a solvent project with a possibility of growing. Undoubtedly, it is a project to keep in mind for this coming year as one of the most interesting projects to follow and with greatest potential. So what do you think? What are your thoughts about Anchor protocol? Let us know in the comments below. We hope you enjoyed watching the video as much as we enjoyed bringing it for you. See you until next time. Goodbye.